Hi, everyone. I'm Aaron Larson, executive editor of Power Magazine, and you are listening to the Power Podcast. On today's episode, I'm joined by Hill Vaden, executive director of Energy Capital Insights with S&P Global Energy, and Doug Giuffre, executive director of North American Power Markets Analysis with S&P Global Energy. To kick things off, Hill, why don't you tell a little bit about yourself, and then we'll have Doug do the same.
Thanks, Aaron. Thanks for putting this together and for having both Doug and me here. Yeah, I'm a executive director of a group called Energy Capital Insights at S&P Global Energy, and we are looking at energy investment and energy capital, trying to see where the money's going in energy, who's creating value, who's destroying value, and spending a lot of our time these days on power and the convergence between AI and electricity.
Very good. I'm looking forward to speaking with you. And Doug, please do the same and give a little background on yourself.
Yeah, absolutely. Thanks, Aaron. It's great to join you both today for this discussion. I lead S&P's North American Power Renewables research team. So what that largely entails is developing long-term outlooks of market fundamentals, electricity demand growth, supply utilization, soup to nuts coverage of the power sector. As you can imagine, these days, it is really all around data centers and how the industry is going to come to grips with this rapid load growth. How do they respond? Having done this for 25 years, I would say this is a period of the greatest uncertainty, both on the demand and the supply side. So it's really exciting times in power today.
Mm-hmm. No doubt about that. And I know S&P Global is hosting a Global Power Markets Conference in Las Vegas. That's on April 13th through the 15th this year, 2026. And the conference theme is Navigating Change, Managing Growth. And from your vantage point, tracking capital flows and power markets, what makes this particular moment so pivotal and important for investors and developers?
I mean, I'll maybe start, Doug, and you can kind of fill in some things as well. But I think the big story here is that North America Power is growing faster than it's able to fund, right? And so there's a real opportunity for capital partnerships, and you've got large demand growth, as Doug mentioned, from the data center story. And then you've just got large demand growth that's coming from reshoring of industry, from more air conditioning, both in the U.S. and globally. And so there's that theme is going to be echoed throughout the global power markets. And then obviously the mix is changing to include more intermittent sources, to include more innovative, whether geothermal or advanced nuclear. It's more than just a historically gas and coal and hydro story.
Yeah, I think where I'd add in a little bit there is this to me is a period in which we've got some fundamental mismatch in timing that creates the challenge here. Remember, the industry had basically been zero growth or very modest growth for the last 15 years, largely. And the industry was transitioning. So we were phasing out a lot of our conventional, particularly coal, and building a lot of wind, solar, and batteries. And this load growth has come on so rapidly. It was just a few years ago that load growth projections were below 1% per year, out to the next 10 years. Now we're talking 2.5 to 3 or even higher. And the load is coming on faster, as Hill was mentioning, than supply can respond. And so we've got markets that are very tight. We've seen that in PJM capacity auctions in other places. And now supply is really scrambling, and it's just very exciting to see how the supply side is pivoting to respond to this. And these are a lot of themes that I think will come out in Las Vegas at the Global Power Markets Conference.
Yeah, I think you both nailed it, talking about data centers and talking about growth. And I, too, remember, years of stagnant growth, where we weren't talking about it at all and plants being retired. And that has just changed on a dime. How are investors basically adjusting their strategies to manage risk in this sort of an environment?
Yeah, I mean, I think the volatility stems from, as I was talking about, this mismatch in timing, the suddenness of the demand growth. I mean, I would just call out one area where we have seen a dramatic pivot in the market, and that has been a return to gas being in favor again. Looking back through, gas turbine orders, something that frankly we stopped tracking very closely, a handful of years ago. There just weren't a lot of orders. Coming out of 2018, when we had a lot of new gas projects hit the market, there was not much of a pipeline behind that. A lot of investors were looking at markets that were flush with interconnection queues full of solar and batteries, and the prospects for investing in new gas just were pretty dim. And last year, we saw record orders, well, cyclical high for orders, 43 gigawatts of gas turbines ordered for the US market. We haven't seen those type of numbers in 20 years from the last merchant power boom in the early 2000s. And so that is having all sorts of impacts, supply chains trying to catch up, the price of combined cycles effectively doubling or more. These are the type of things are adding to volatility and risk that the sector is facing.
Yeah, and I think, just to echo what Doug's saying that, after, for the past 25 years or so, we had a big boom in gas-fired generation leading into 2000. And then since then, I compare it to kind of a frog in the pot, right? Where the water's been getting warmer and warmer, that you've been retiring baseload generation, you've been adding population by 1% or so a year. And so that water has slowly gotten warm and the building stopped, right? That you were adding new intermittent supply and wind and then solar, but you weren't adding the dispatchable generation that needed to complement that, needed to firm that. And so now the data centers show up, the water's boiling, the frog is dead, and now industry's having to respond and having to respond quickly.
Hmm. No, that's a great analogy. And it's important to realize that it's more than just the data centers that are leading to this. We've got electrification of transportation and a reshoring of manufacturing that we're seeing and that the government is really promoting. So, do you think this demand is just going to continue and that this pipeline will basically be built out the way it's expected? In the past, we've seen queues get very large, but the capacity never really gets built, and a lot of those drop out. Is this a new era where those things are the plants are going to get built and everything is going to move along as expected?
I think what is different today than the, say, past 10, 15 years, or even prior to that, a lot of this load growth in the near term, at least to 2030, really is driven by the data centers. And these are very large, discrete loads. And so it's very real in the sense that I live in Ohio. You can just go around the Columbus area and you see all the development, all the data centers are under construction. A lot is going to hit the grid over the next 3 to 4 years. And so at least 2% growth is very, very real. Where we get uncertainty is, can that get up to 3 or 4%? If you were to, look at the universe of all the proposals, you would likely get to that type of load growth. The reality is, as you mentioned, there are going to be some that delayed. There are going to be some that slip, some that are canceled, and it's very hard to isolate that and make calls on how much will actually materialize. But we are in a new world, a new paradigm where we are seeing robust growth. The uncertainty is, how high can it get and how much load can the grid accommodate here in the next 5 years? As you get beyond 2030, the uncertainty only increases.
Hill, anything to add on that?
No, I mean, I'll just you said, is it all going to show up as expected or something? And rarely do these things happen exactly as they expect. So I would maybe take the opposite side on that. I think the load growth is coming. That the electrification story is real in terms of energy. It is the place that we're seeing the most kind of capital allocation these days. What that looks like in 2, 3, 5 years, we've got forecasts for it, but I think there's a lot of, as Doug says, there's a lot of uncertainty on exactly how it shows up, the timing of that. You get into project delays, you get into new forms of energy kind of contributing to the mix. So there's a lot of unknowns, which makes it fun.
Definitely fun. Doug mentioned that there was growth in Ohio, where he's at, and we know Data Center Alley is considered that Virginia corridor, and Texas seems to have a lot of growth. Are there other parts of North America that you think people can expect to see capital moving and construction being done, or what's your view there?
Yeah, absolutely. Parts of the upper Midwest. So, for folks familiar with power markets, the MISO market, seeing a lot of activity. Certainly, the Southeast, Georgia in particular. We know a lot of data center activity there. One area that we're looking at, again, I come back to gas turbines because this has just been such a dominant theme. When we look at where the gas turbines that were ordered in 2025, where they're destined, the three big markets are MISO, SPP, in the Southeast. We hear a lot about ERCOT and PJM, and there'll no doubt be plenty of development there. But the market signals are a little challenging there. And I think the regulated environment, some of the investor owned utilities in MISO, SPP, in the Southeast maybe a little bit more conducive to moving projects forward, a little bit easier to permit. So we're seeing a lot of development there, but certainly a lot of load is expected in PJM and ERCOT. I'm confident that we're going to see a lot move forward in ERCOT. PJM has just got so much uncertainty around their capacity auction and potentially this longer auction we may have in September to pair up buyers and sellers. So I think right now a lot of folks are just waiting and seeing how PJM settles out.
Yeah, I think one of the great things when you look at the US and some of what's happening in power markets, you've got a lot of different regulatory environments that allow for different types of innovation and experimentation. So you can do things differently in ERCOT than you can in PJM, than you can in MISO or whatever else. You've got people moving to warmer locations. So you've got demand growth from, just people living in Texas. You've got sunshine in Arizona that allows them to do things differently than, say, Maine. You've got hydro in the Pacific Northwest that gives them the ability to do things differently than other parts of the country. So I think, that there is plenty of opportunity for investors throughout this space, throughout North America. But what makes sense in one part of the country isn't going to necessarily make sense in another part of the country. And then when you layer in the regulation side of it, that there's great sun in Arizona and Texas, right? But there's also great policy in areas that help to stimulate investment in resources that might be lacking in kind of the natural endowment.
I'd like to talk a little bit about nuclear because that's near and dear to my heart. That's where my background is, having been in the nuclear Navy and working at Quad Cities nuclear station in my past. What do you see happening in that industry? We talk about and have heard about extending plant lives. We've seen plants that were previously retired starting to have new life and coming back. We're hearing a lot about SMRs and advanced technology that might get built. We're seeing hyperscalers get behind some of these projects with Meta, Amazon, Microsoft, all kind of working with nuclear companies. Do you think this is a sustained movement toward nuclear power, or is this just enthusiasm that'll end up dying off in the end?
I think what we're seeing today is capturing some of the low-hanging fruit to expand the nuclear fleet and tap into and address the supply crunch that we have. So, restarting recently retired reactors, to me, that makes a lot of sense. You have this firm 24/7 power that, can be restarted, carbon-free energy. And so we've seen where that's possible, some units being prepared to be restarted. The next area is uprating of nuclear capacity, which, we used to see quite a bit of, but after, say, 2013, 2014, that really slowed down. The nuclear industry was in a different environment. We had, a lot of renewables entering the market, cheap natural gas, and on a competitive basis, nuclear units were struggling. And so rather than seeing uprates, which are still capital intensive, we were seeing nuclear plants being shut down. Today, obviously, the environment is quite different. And so we're seeing a lot of announcements of uprates of nuclear capacity. Our estimates are, there's probably potential for over 5 gigawatts of that. I think we've got announcements, 1 to 2 gigawatts at least. We think those will come forward. Those are really the levers that the industry can pull to help address the supply gap to 2030. Beyond that is when we have the conversation around, SMRs beginning to ramp up and, potentially new conventional reactors. That becomes more of a long-term story, and, we'll see how that evolves.
Yeah, I think one of the things that nuclear has going for it is it's got pretty broad political support in terms of, both sides of the aisle wanting to make it work. It checks the box for those looking for clean electricity. It checks the box for those looking for firm electricity. As Doug mentioned, at least in the near term, it's going to be uprates and restarts. I like to say that it's harder to build a nuclear power plant than it is to build a nuclear PowerPoint presentation.
Mhm.
And you've seen no trouble from people raising equity financing for nuclear ideas and advanced nuclear projects. It's a little bit harder on the project financing, maybe a lot harder on the project financing. So government is going to be, or taxpayers are involved in these projects, as well as the hyperscalers who have been putting power purchase agreement together to support some of these things. The other thing about nuclear is you come back to ideas like this because nothing else has worked, right? The other things that we've tried to do, the things that nuclear can do, you haven't found something with a 95% capacity factor that is also clean, right? And so there's a lot of reasons to be enthusiastic about nuclear. There's also a lot of things that need to go right, and one of those is regulatory, where it is really challenging to build a nuclear power plant on time and on budget these days.
Mhm. Do you think there's any financing models or policy mechanisms? You talked about the bipartisan support behind these. Do you think they'll come out with some sort of policy that might help the de-risking of these investments, or what do you think there?
I mean, I think you're seeing some of it already. That you've got so Microsoft signed a PPA with Constellation for the 3 Mile Island or the Crane Energy Complex, and the DOA is bringing I think it's $1 billion loan to it. So the government is involved in that. You've seen government support for some of these other ideas as well, and then you hear conversation from the administration on doing things to address the permitting and address kind of the somewhat the Byzantine approval process for each of these different constructs. So I think things are happening. How quickly it moves is up to others.
Beyond nuclear, where else do you see interest? I know for me personally, I'm excited about geothermal and some of the things that are being done in that space. Are there other renewables or battery storage technology that you're excited about or that you see making a difference in the future?
Yeah, I mean, I think we're seeing a lot of battery storage. I think we had a record last year in terms of grid scale battery storage deployment. I think we'll continue to see significant battery storage deployment. A lot of the hyperscalers are signing PPAs. What they're looking for is clean power, but also trying to firm up renewables. So, last year we saw a lot of hybrid contracts signed, so solar paired with storage. I think that trend continues and accelerates here. I think a lot of people are excited about advanced geothermal. I think we're probably still in early stages there, but certainly there's a lot of potential for that. I think the challenge right now is where we see a lot of the large load growth tends to be in Eastern markets, and the real geothermal potential tends to be in Western markets. Now, that's not to say there's not good data center growth or robust expected in the West, but not like we're expecting in ERCOT and PJM, where we're much more likely to see the conventional technologies deployed there.
Yeah, I mean, the geothermal, I think, is one of those exciting pieces of innovation, right? That I think there's some of the same challenges that nuclear is facing, advanced nuclear, where it's easier to raise equity financing than it is to raise project financing. I think that what Fervo is doing in Nevada is fairly unique, given some of the access to geology and geologic information that they had around that project. I think there's some exciting things that Sage is doing in Texas, where they're applying some of the advanced kind of shale drilling methodology or the drilling science to that. So I think that there are things there to be excited and interested in. I'm particularly interested these days in fuel cells, natural gas fuel cells. Doug was talking about the the boom in natural gas-fired generation, and part of that led to a 5-year backlog for turbines, right? And so people went to gas reciprocating engines, which also developed a bit of a backlog, and fuel cells, particularly the bloom boxes, were available, and they might make a lot of sense in certain applications. And the advantage of having in a sector like the hyperscalers, which are a high profit margin business, needing electricity, and that electricity representing an overall small portion of their stack, they're willing to pay for high cost electrons, and they're able to pay for high cost electrons in the way that other large loads are not.
Every administration seems to have different priorities, and right now we're in kind of a fossil fuel prioritized situation. How do you see federal incentives and tax structures affecting the investment decisions that are made? And are developers and investors kind of in a holding pattern on renewables, or have they adapted to the new realities?
I mean, I think that there's obviously changes from the One Big Beautiful Bill Act with the Inflation Reduction Act. I think the consequence of some of those changes is you accelerate the siting of some of the onshore wind and onshore solar projects in order to beat the start of construction deadlines. If you look at the OBBBA, there's a lot of support for clean, firm generation. I wouldn't call it support for fossil fuel source generation. Yes, there's coal plants that are being asked to stay online longer, but we're not seeing people build new coal plants as a result of anything that's happened with this administration. It's gotten harder to permit renewables, particularly if you're relying on federal lands. It's also gotten harder than it was, several years ago. That's having the consequence of thinning out some of these interconnection queues. And so I think that there's a lot of good reasons to build low marginal cost electricity assets, right? And that's solar, that's onshore wind, and batteries have to firm that. So I'm fairly optimistic on the overall kind of power investment story, kind of almost regardless of technology, as long as there's a pathway to profitability.
Yeah, and I'd agree with that. I think the environment has clearly shifted for especially wind, but also for solar. Our in-house S&P outlooks, we've brought down our expectations for wind and for solar following the accelerated phase out of the tax credits. I mean, it's just a reality that, these are going to be more expensive now without the taxpayer support or, production tax credits. There's still a robust market for, in particular, solar deployment. Part of it is coming from corporate demand, which now exceeds even state-driven demand from RPSs. But the two of those collectively give a solid floor to where deployment will go, and they can still be very competitive in markets. In particular, when we're in an environment where the cost of new gas projects is more than doubled. So there's still going to be a lot of opportunities, a robust build. It's just maybe not quite as rosy as it was, in early 2023 when we were fresh off passage of the Inflation Reduction Act.
And I'd like to talk a little bit about tariffs and trade policy, because that's another new variable that's affecting project economics. And are there strategies that you're seeing companies use to mitigate risk, or what's your insight?
Yeah, I mean, I think this, benefits some of the larger players. Maybe I don't want to call them out by name, but some of the players that are more sophisticated or have the ability to warehouse a lot of their equipment, and they have projects that have been in the pipeline they can move forward. This is in many ways going to be a race to deploy here before some of these milestones are hit. So I think, solar again, I think they can navigate some of this fairly effectively. Again, the large players. Batteries can be more challenging given some of the FEOC restrictions. But again, there's a lot of drivers for battery deployment where, even if you end up going with higher cost batteries, it still may make sense for some deployment, some strong deployment. One of the issues that I didn't mention previously, but I want to point out here wind industry is facing obviously significant headwinds from the administration, various policies hitting permitting. The reality is the onshore wind industry in particular was facing headwinds even prior to the Trump administration. We had seen a slowdown in deployment. We were seeing really in many states and counties across the country increasing local opposition to wind deployment in particular. It's probably, we're going to be in an environment where we see slow deployment of onshore wind probably for at least the next 2 or 3 years. Depending on what happens politically after that, that may open up and we could see deployment ramp up. But unquestionably, this is a difficult environment for onshore wind.
Yeah, and I think, offshore wind is even more difficult in the US, but offshore wind is having its troubles outside of the US as well. And these are complex projects that require a high electricity price to support. So there's some market reasons that on offshore wind is being challenged outside of the very real US political reasons. Thinking about some of the tariff conversations in the FIAC or the foreign entity of concern, you've also seen cost declines in a lot of these technologies that even with the fiat concerns for some of the batteries have come down in cost so much that some of these developers might be able to shrug them off, right? That the economics still work, that these are, Doug said it as well, but the solar plus battery combination is a good low marginal cost asset, and the cost improvements that have that been realized by the developers are allowing these economics to work and don't necessarily require the subsidy that was needed to get them off the ground in the first place, right? And that's the way subsidy work, that they help to incubate an industry, and then they are withdrawn, right? And we may be getting to that point in some of these technologies, which is a great testament to an innovative industry.
What about the merger and acquisition landscape? I guess I'd like to have you maybe touch on that a little bit and what you're seeing in M&A.
And I think that it has been a real boom, particularly on the gas-fired generation story. And we kind of picked up on this, I guess, about 18, 24 months ago. And we looked at the sector and we're like, oh my gosh, look how fragmented the gas generation fleet is in this country, that there's a real opportunity for folks to roll up these assets. It was cheaper, it was much cheaper to buy than build, right? That I could buy for whatever it was, $800 a megawatt. $800 a kilowatt rather than build at $1,500 a kilowatt. And now that's gone up to $2,400 a kilowatt to buy or to build. And so that helped to support a lot of the activity in 2025. I think you've gotten to a point where a lot of those marquee assets have changed hands on the gas-fired generation. And a good example of that is one asset, the Cogentric asset that Vistra just bought. Signed a deal to buy in January. That's the second time that collection of assets has changed hands in 18 months, right? So you were seeing, that it's been hard to reload for those who had gas-fired generation assets to meet the demand for that. When we look at solar today, it's similarly fragmented. It is another highly fragmented space, and I think that we will see potential roll-up opportunity and potential more take privates. We just saw one earlier this month with GIP and EQT and Qatar and others, and the $11 billion deal with AES. And I think we can see two things happen. One, that some of these renewable assets make a lot of sense in a diversified portfolio rather than a pure play renewable portfolio. And two, if I'm an infrastructure developer, it might make more sense for me to work from a private market rather than a public market, because I can do things differently and I can potentially move more quickly. And there's no shortage of capital in the public or private markets to support these types of projects.
Doug, have you got anything to add on that?
Hill said it well. I'll give Hill his kudos here. This was something that he was talking about really moving. I think before I saw the market move and, talking to my team about, valuations of different gas assets. So, hat tip to Hill for kind of seeing this coming before the market moved.
So as long as we've got Hill giving great advice, what's one thing that you might point our listeners to, one trend or a shift that they could potentially be watching over the next year to 18 months?
Maybe I'll pick two, and one of them is kind of a half a trend because I've already mentioned fuel cells. But I think that the natural gas fuel cell story is potentially really interesting, right? And it's limited to a very small group of players today. But there's reasons for fuel cells to maybe have their day as you're thinking about kind of the behind the meter projects and winning market share with the gas reciprocating engines. The other one is IPOs. I think that over the course of this year, we're going to see some of these more innovative names, some of the geothermal names, some of the potentially the SMR names, and some of the reciprocating engine or distributed generation names seek public markets. And so that's something that I would be watching and paying attention to as we move through 2026.
Yeah, and I think for me, this is nothing new, and in fact, it's a headline news issue. But the affordability question or crisis is going to have some broad implications for the industry that, obviously we don't have a crystal ball and can't foresee how this will shake out, but inevitably there will be some reactionary policies to try to address this. There are always unintended consequences. Two things that I'll be watching for. One, are we going to see states with currently maybe deep decarbonization ambitions have to backtrack off of that to help address some of the rate impacts? We're already seeing some of that in some of the Northeast states. These can be decisions that in the near term can help reduce impacts on rates, but can be long term detrimental and lead to higher prices. Backtracking on energy efficiency investments would be one I'd watch for. The other will be PJM market, for instance. We've had a couple of auctions now with a price collar in place, and we'll likely have a price collar in place for the next two auctions. You can understand why politically, why that may make sense, but the reality is this market needs a lot of supply, and they need people willing to invest there, and putting a price ceiling in place can just complicate that and make it more challenging for the market to send the signals to investors to build projects there. So, we will see some political compromises to address affordability that may be not the optimal way to design markets.
I guess one last thing that I don't think we've touched on, but I'm wondering if either of you have any confidence in fusion energy. Do we think that's ever going to come to fruition, or is that still 30 years out, like everybody likes to joke about?
I don't want to say never, but I don't think it's not in our base case forecast for the next 5 years. How's that for a dodge?
Yeah, I would echo Hill's statement there. We'll wait and see.
Always waiting. Well, with that, I want to remind listeners again that S&P Global will be hosting its Global Power Markets Conference in Las Vegas, April 13th through the 15th in 2026. And I'll put a link in the show notes so people can learn more and register for the event. Again, I want to thank Hill and Doug both for sharing their insight and thank everyone for listening. Any last words, gentlemen?
Thanks for making time.
Yeah, thank you. Look forward to seeing people in Las Vegas in April.